All right, guys, welcome back to the channel. In the last 24 hours, we've seen over $800 billion wiped out across Bitcoin and cryptocurrency markets. We're now down for 28 days underneath the old all-time high, and the total correction so far has been nearly 18%. So we're on the verge now of that low being in, potentially already being in, but of course, looking at the shorter term timeframes will only give short-term results. We still need several key signals to identify the trend is changing, and that's what we want to look at in today's video, along with the rest of the markets. It's your home of macro cycle analysis. I'm going to cover Bitcoin, cryptos, the stock markets, and of course, the real estate cycle. So make sure you hit the like button, subscribe to the channel. Let's dive in here with a little bit of hopium news to begin. On the day where Bitcoin dumped to $89,000. We now see Donald Trump to issue executive crypto policy orders on the first day in office. Of course, if you're a long-time viewer of the channel, you understand that news headlines are there to essentially capture attention. The major thing we focus on, of course, is the price chart that lets us know what's going on in the market before the news headlines, or at least as best as we can do, just like the 3-day rule from the all-time high. I don't know how much closer you can get to the market from where these price points are, but this has been an absolutely massive signal that also helped us out in the March top. So you guys that have been following for a while now saw that this took 144 days to the low and then 237 days to break out. And we got the same signal this time at another new all-time high, and we're at our 28 days beneath that high now, only down roughly 18%. Still a few more things to do here to get back into a position of strength. However, we have the inauguration coming through next week, and if we were to see some sort of pump from this point, it's a good thing that Bitcoin has been dropping into some of these major news announcements. The worst thing you want to see, absolute worst thing you want to see, is the market pumping up into some news announcements, changes in the fundamental environment, because that typically leads to a sell the news event. Whereas right now we're getting a potential buy the news event, and it could already be in at this stage. More on that in future videos as more things pop up. However, we also see Meta shareholders advocates for allocating dollar reserves to BTC. Now, it's been an ongoing trend over the last 12 months, especially after Saylor got into the market, or MicroStrategies, around 4 or 5 years ago. We saw Microsoft think about it, but reject it. We've heard talks about Amazon, and now we're seeing talks from Meta shareholder advocates are looking to get into Bitcoin with their dollar reserves. Now, none of this has actually occurred, but it's interesting to see, at least at this stage of the market, especially with where Bitcoin is at, still holding above key support levels, that you're still seeing major, some of the biggest companies in the world are considering BTC. At least it's being talked about, and that's what we still want to see moving forward into the rest of this cycle. What we don't want is for the space to go absolutely quiet. Now, before I go further into Bitcoin and cryptos, let's take a look at the stock markets, as in the last 24 hours, they've had a little bounce here, but they've had a full Trump pump reset. So this is the S&P 500. This is your Trump pump bar here, Wednesday, the 6th of November. Obviously, the election on Tuesday night, markets open the next day. That's your election. And the price action ran up to a new all-time high and has now retraced the entire amount from that point, from Trump being elected. So it's not a bad thing, at least in my opinion, my analysis here, that you're getting a full reset or a full retrace leading to a potential reset in that market psychology and that market sentiment. And to me, the big question that's on everyone's minds at the moment, and I've got some more data to go through on this, is the top in? Because we've been down for an extended period of time, 28 days from this top. This is for the traditional markets, which of course need to see strength so that you get risk assets moving as well. If people aren't interested in trading the major markets, they're less likely to be interested in gambling on stock, on cryptos and meme coins and any other new narrative, right? And what I'm saying is the top in because of this here, 28 days. All of these other corrections that we've seen throughout 2024 have barely lasted 20 days. You can see here going back into late 2023, you have a top into a higher low, 20 days, and then it took off to a new all-time high. Top to bottom here, 18 days, top to bottom into the Japanese yen carry trade was 20 days. That's the total calendar days. Remember, these are the days that we actually live through. The other number here are the trading days. You've got 20 days top to higher low. You've got 20 days top to bottom here, 18 days. And now we are at 28 days to the current day and 27 days to that low. So this is the longest period in over 12 months of market action, the longest period of a correction here. So it's no wonder investors are feeling like the market's not going anywhere, especially when they've been conditioned to believe or feel, as a lot of people do, that corrections are only lasting 2 to 3 weeks. And right now we're into our 4th week of this correction. Is it over? No signs yet. A good early sign though, early. And if you're trying to be early, there is a higher chance of being wrong. You're looking at this close from yesterday, which is above the swing bottom here, and then the next swing bottom here. So it's an earlier sign of strength here, which might lead to at least a test of the swing top or the 50% level. Now, of course, long-term viewers, again, would understand breaks above the 50%, stronger half. It comes up and tests the 50%, gets rejected, a higher chance it's going to come back down and test the lows here at 58. But remember, we still have plenty of support levels down at 5,700 and 5,600. Same thing that we've been looking at now for over a month. And corrections are just part of the bull market. And if we do see these corrections last for that extra little bit longer, come down to some key levels, that is amazing. It's exactly what we want to see in the markets because of how strong this move has been to the upside. And typically when this happens, it should reload the the market, reset it, getting ready for that next move to the upside. So that's the S&P 500. NASDAQ has been on a similar trajectory here, also down for the last 20 odd, nearly 30 days. And in terms of the reason why this is happening, it looks like it's part of the government bonds hitting new fresh highs. Over a 1-year high hit here. Now taking a look at the data on what that means, the breakout in the 10-year Treasuries yield suggests rates are going higher. And if you recall from my forecasts for 2025, I'll leave a link to this in the video description for all of those forecasts that I'm giving you for the stock markets, for Bitcoin, cryptos, some of the economic stuff that I look at. It's in a video in the video description here. I'm thinking that we still will see rates go higher. So interest rates will be higher. And I said this a few weeks ago now, a couple of weeks ago, at the beginning of the month, before all of this sort of stuff started coming out. And the reason for that is that we're still seeing asset prices increasing. Although there's a short-term correction, it still looks like asset prices are increasing. So just taking a look at this particular signal, breakouts of the 10-year Treasury suggests yields could drift higher, and what that means to the stock markets. Well, in terms of the summary here, rising rates have often acted as headwind for the S&P 500, pressure becoming apparent 2 to 12 weeks later. So 12 weeks, obviously 3 months in the short term. And that leads onto what we've been discussing recently. Quarter 1, maybe even the first half, is not going to be a straight up line like we've seen over the last 3 years, going back to 2022. It could be a little bit choppier here, even if we see some further downside, maybe some further upside, and then back into this trading range. Maybe something similar to what happened at this area here, or this area here that I'm circling on the chart. You've even got 2019, and also in 2018, you still had some pretty severe corrections there. So I'm not advocating for a 20% loss or a 15% loss. The market can do what it wants to do. I'm just looking out for how much the market has corrected here, and the fact that it's still a macro bull market, and trying to answer that question, of course, for our longer term holds or our trading in Bitcoin and crypto, is the top in. And at the moment, I don't see any signs to suggest that the final top is in. A local top obviously has already played out. So that's the summary here on this particular data, looking at the 10-year Treasuries breaking to new fresh highs out of the last 12 months. Now, another quick piece of data here is the first 5 trading days. And I don't typically put a whole lot of weighting on this. It's just an interesting one to note. After the first 5 days are up, what then? And there is a lot of data here going back to 1949. The S&P 500 closed higher over the first 5 trading days of 2025. Yes, it was only 0.6%, but of course we're dealing with the stock market here. Historically, stock markets have tended to perform better and much more consistently when the first 5 trading days of the year show a gain of any size. Pretty crazy, but I mean, this is just what the data looks like here. And if you were to put a buck in, $100, $1,000, whatever you want, $10,000, going back to when the data started in 1949, that's a pretty significant return there, 181%, or no, it's 181 times, because you're starting with $1 and it ends up at $181. Yes, it's over 70 years, but it's a pretty massive return just going along with this particular signal. So here are all the results if you want to pause it and have a look at them for yourself. Otherwise, we'll skip down to the summary here. And the time's up. This is the whole year, just from those first 5 days. It sounds crazy, I know. Percentage of times up, 80-20. 4 out of 5 times it's up, 1 out of 5 times it's not. The average gain, 12%. If you recall, 2023 and 2024 have been roughly about 25% increase on the stock market. Now it's looking like, well, at least the average is 12 and the median is 13. And so this first part of the year might be part of what gives a lower return for this year, but it's still an up year. So I'm still looking at that 2025 as being an up year, as it's still part of the of the 18-year cycle into this final peak before the significant collapse. And we're not there just yet. Over to Bitcoin, cryptocurrencies, and these massive liquidation events that are on the verge of resetting the market as we speak. $800 million. I may have said billion in the intro, so if you're watching now, apologies. But 800 million, you get the idea, wrecked over the last 24 hours. That's typically a great thing to see, because you need to get that liquidation or that leverage out of the system in order to reset and begin to go again. So this has been the highest liquidation event since the 19th, 20th of December. On top of that, at those times, right, you typically see, what's that? December 19th, 6,800 ETF flows coming out of BTC. So this is the ETF flows. This has been an absolutely amazing contrarian signal. So I kind of feel a bit bad for people that are following this as a trend following system when it comes to their Bitcoin ETF flows. You know, money's going in, following this money going in and out and so on. Typically, when you see some of these highest events, highest flows in is at or very close to the tops. And then when you see these extreme events to the downside, selling. So a lot of ETFs coming out, a lot of ETFs being sold, and the flow goes out. It's at or around the lows. So it's essentially retail doing the wrong thing at the turns. And it's not only just retail, it's basically anyone buying into the ETFs or selling out of the ETFs. Absolutely generally, from what you can see from this, over 12 months of data now, it's basically been at those exact turns. So I think it's a fantastic contrarian indicator here. 19th, big outflows. Also this day here, 30th of December, 4,500. And then recently you've got January 8th at 6,000. And then today we'll have to wait and see when that data comes through for the 14th. Do we get big days out? You can see them here. There is your 20th. So the 19th into the 20th. Then you had the 30th. There it is, another low. Then you had the 9th there, so the 8th, and the data comes in through that 9th period, people selling out. And you also had big liquidations on those days too. So this is your little gift from myself here on the channel and Michael's channel as well. Found this particular signal to be absolutely amazing. If there's one thing you take away and you really can't understand anything else, just keep having a look at the ETFs, because basically everyone in the crypto space talks about the ETF flows, especially if they're not into technical analysis. They'll talk about it as if it's the greatest thing in the world, but what the data has shown for its entire history is it's a great contrarian signal. Now, watching the Google Trends with Bitcoin and crypto search terms, they had started to flatline, which is a good thing, and it was holding up above previous low levels. The previous low period I'm referencing is October and November of 2024, essentially before the $74,000 breakout, and we have seen the search interest remain elevated, so remain above those levels. Look at crypto at this stage, it was around single digits. Bitcoin was around high teens, low 20s. This time it was around 20s, and crypto was in the double digits. So it so far has been elevated from that point, which means you still have more interest than what we saw on the breakout. However, the market had gotten slightly quieter than that period. With the exchange volume, we've also seen a bounce back from this point. I'm just resetting it for the day. Still don't have the data in from Monday, but at least we saw a bit of a base form here at $50 billion. So above all of that previous trading volume, the 7-day moving average back from 2024 after that March top. So at the moment, looks like a good thing, starting to get a break to the upside. Would be interesting to see what happens from Monday. So this is also a positive sign that you're starting to see some sort of low forming in the market, provided it remains above the support levels. And the fear and greed index, probably one of those things that I think still needs to reset a little bit further. But of course, I'll let the market do the talking at this point. So far, we've only seen really 1 day here of neutral, and the rest of the time it's been in greed. So it's jumped back up to 60. The market sentiment has remained relatively greedy throughout this period. And I know some people are still wanting to reference the the coin market cap crypto fear and greed index. This one relating more so to crypto. So maybe it's a little bit closer to home for some viewers who are way too heavily exposed into altcoins as opposed to BTC, which this one here is referencing more so. And so if you are more heavily exposed to altcoins, you'd probably feel more like this than the other chart because, well, at least the sentiment here has been around neutral for a lot longer. It dropped out of greed a little bit sooner, I believe, or extreme greed, and then hit that neutral and has remained around neutral for some time with a low coming in of roughly around 43. So overall, it seems like a low is forming. I suspect we might get another test lower. That could come from a higher priced low for BTC. So if Bitcoin is at 89 is the current low, you could still see a run to 99K to test the 50% level. And then if it pulls back into some sort of grinding low, that could freak out the market more so than what this $89,000 Bitcoin did. It's happened basically every single time. And that's what a higher low looks like, which is an absolutely fantastic high low, like we saw through September. This particular fear on socials, right, on X, on YouTube, that one there, most people freaked out. So that was Bitcoin had already gone to 49K, rebounded, came up, got rejected. Everyone thought it was just going to happen again because we'd seen it happen already for 5 months in a row. And that in September was the time when most people freaked out again. Yet we started to put in a higher low. You got a higher low from August, you got another mini higher low here, another higher low, and then it ran up and gave us our overbalance in time and price. And then when October happened, again, a lot of fear across socials, people talking about, well, it's just going to happen again. We're going to come back down and, we're heading past 40,000, going to the 30s, and all sorts of nonsense was being said at this time. But again, another higher low formed, and that's when Bitcoin really started to show a lot more strength. So what I'm saying here is any sort of tests up to these levels, 100, 101, 102, and a rejection into a higher low could spell more fear, which could be part of the reset of the market sentiment over the coming few weeks, which is actually a bullish signal, not a bearish signal. So that's something that I was also looking at back in December, essentially looking around those fearful comments and the jaded comments back on the 23rd. So it was pretty much all around these peaks. Here is that signal that came in for BTC. That was on the 20th. You had the 3 days down, telling us that the market was likely going to be under this all-time high for longer than many had thought based on the previous market action. Came rallying up, got rejected, down again to a new low, rallied up, came back down to a new low, and another new low just in the last 24 hours. And at that time, basically, people thought I was crazy to be talking about the 3-day rule yet again from this 108 top. It's just, it happens time and time again. So just pay attention to it. Hopefully you do better than what the masses do out there. And if you are doing better, let me know. Hit that like button down below. Give us a comment. Hopefully this is helping you out in your journey. If it is, and you want to see more of it, obviously subscribe. And we also have the free report coming out in the next 24 hours. So you've got more information for your benefit. Name, email address, link in that video description. And you'll also get access to the free Discord here. You can check out the reviews for TIA Premium. You've got the updates from us, Michael and myself, and also trading results. Lots and lots of stuff going on here from our traders. Go through each one. Have a look at what they're doing. There's some losses in there, lots of winners, lots of discussion there. So check that out if you want to see more about trading long-term and short-term in the markets. Okay, back to cryptocurrencies, and let's hit the USDT dominance. As I said yesterday, this was sitting dead on 4.2%. We had a rally up, a fake out, and then it's come back into this trading range. The beauty here, the very, very subtle beauty, if I can say so myself, is that we're looking at a possible close here underneath the diagonal. That could lead to a little bit of a downside for the USDT dominance. Remember, down, good for Bitcoin and cryptos to the long side. And if this goes up, that's bearish for BTC and crypto. So basically they'll be going to the downside. At the moment, we are now in a even tighter trading range, basically between 4.4 and 4.2. So should we see some downside? Definitely want to see some breaks below 3.9, which is that previous low, and then come back to retest that 3.7. That would lead to your big blow off tops that people are really waiting for at this point. To the total crypto market cap, we're down 19% from the top. So this is all of the cryptocurrencies combined. There's still a lot of strength here. Looking at the closes above all of those previous swing bottoms and a test there of the previous low. Just watch for any sort of reactions now to the upside. So any rallies that fail at the 50% level. In the case of the total crypto market cap, 3.4 trillion. And any sort of downside move here that takes out the lows, that's going to be very bearish, obviously. But anything breaking above and holding above 3.4 for now is, at least in the short term, a good sign for the bulls. The total crypto market cap, so all the altcoins in this case, is still holding out very well, still above all the previous tops. And as you can see on my little red arrow here, we're approximately here in this breakout. At first, I thought we were probably somewhere around here because we're getting close to the previous tops. But I think we're probably more so in this breakout here, which obviously just gives us that little bit more time. I'm just measuring the lows to the lows, having a look at these patterns. It had gone a little bit quicker than that previous cycle, which is why I had this up a little bit higher. But in terms of the stalling out now, it's still stalling like it's just breaking out of the first couple of tipping points. So not necessarily a bad thing for crypto, but it is a bad thing for people who have a very short attention span and emotionally not all there. Moving on to Bitcoin. Damn, I don't know where I got that from. The 50% level. The last thing I want to mention for Bitcoin before I get onto the cryptos is the 50% extension. So this is that weekly bar that we are watching, the weekly extension here to the downside, and the next target being roughly around 86 or 85,600. Reason for that is this entire range projected off this particular top, and that's basically an exact repeat. Nothing wrong with that, just a nice clean out if that does occur. Now, because we've had a couple of closes above this 50% level, now it just reduces the possibility of it getting down to 85. So I'm still hearing calls about Bitcoin going under 70,000 to 60,000. People say, I wouldn't surprise me if it gets that low. It would definitely surprise me at this point if it got below the 70,000s, just based on the strength that is forming at the moment, right? And even if we get some rallies and some rejections, I'm still only looking somewhere around the high 70s at the absolute worst case. I'm giving you all cases here. And then, of course, mid 80s and high 80s. At this point, probably somewhere in those mid to high 80s. For Ethereum, however, although it's above the 50%, the daily close here, 3,100, it's still below that 50% level. So you can see the same extension projected here. The 100% comes out at 27. It's now closed under that level. So it has a little bit of a higher chance to test that $2,700 or $2,800 level. Yesterday got to $2,930. So overall, I still see strength longer term here. I think it's just going to take a little bit longer for the consolidation to occur for ETH yet again, somewhere between 27 and the current prices here of about $3,200. Similar sort of thing here for Solana, except it's above its 50% extension, but still below the 50% of the retracement here. I know there's a lot of 50% to think about, but we're just looking at short-term and longer-term support and, strength and weakness. Now, at the moment, trading range is still intact. You got the lows here at roughly 170, tops there at about 220. So I guess you could ask the question, is the top in? At the moment, it still doesn't look like that this is going to be the final top, and there's some opportunities to be either, say, A, buying the dip, which I'm not advocating for, only because you don't know where that dip ends, or look for a change in trend coming through from the swing chart and then a possible breakout to the upside. Just like what we did back here at $162. We saw multiple tops, 1, 2, 3, and then a fourth time breakout. You got a retest of that top and then a nice big move to the upside. So you play the game however you want. It's your money at the end of the day. Here it is for the last one. SUI is also finding some resistance here at $5 and $5.40, which was that previous top. And so I've been watching this as a potential very early days top forming similar to what formed in March. Now, it's not to say it's the end, because SUI went from that point of a top at $2 down to 50 cents and then all the way back up to $5.40. So there's still a possibility of another run in this crypto bull market. However, there are some signs to suggest that it might need a little bit of time to digest the move to the upside. Some of the other things I noted here, if I move this to the side just for a sec, just check that volume. You can see it's starting to decline towards that peak. And similar things here. Once it got the first peak, you can see some of the volume decline here as the market is rising. So a little less interest in those higher prices. And I think the smart money is waiting, whether it goes a little higher and then starts to reset, another, it's always a possibility. But the main thing to me here is the risk and reward just isn't there. And probably the smart money is also looking at that. We'll get more signs of it if SUI breaks down from the 50% at 440 and then starts to tackle that $4 level to the downside. So although it's very early days to a possible reversal in the market here with this low that came in after an 18% decline for BTC, you're now armed with all of your overhead resistance levels to find out whether we're going to see some strength or weakness in the coming days. Overall, however, I still see that we've got much more upside to go, and I think we're much closer now to a short-term low than we are to that previous top. So I think we've got a little less time to come in here before we see some sort of move to the upside and take out that new all-time high. Make sure you hit the like and subscribe to the channel if you haven't already. The free report is coming out in the next 12 hours. Name, email address in the top of the video description. Click that link there, and you'll also get the quick start guide, plenty of other welcome gifts there for you guys. And I'll see you back here at the next video. Till then, take care and peace out.